So crypto taxes can be stressful, and it's getting to that time of the year where they need sorting out. But what if I told you there was a legal way of reducing the amount of tax you owe on your crypto capital gains? In this video, I'm going to break down what exactly tax loss harvesting is and how you can perform it to save you some money. So just a quick disclaimer before we get started then, of course, neither myself nor Learning Crypto are professional tax or financial advisors. So nothing in this video should be constituted as either financial or tax advice. So if you do need that kind of help, go seek the services of a professional. So let's get into capital gains tax, when you'd be expected to pay it and what sort of rates. This will be a brief overview as I go into a lot more detail in another video, which I'll link at the end of this video. But essentially, capital gains tax, as you probably know, is the tax that you pay on any gains you make on selling an asset that's increased in value. So the example you've got here, let's say you bought £5,000 worth of Bitcoin and you then sold it later for £25,000. You have then made a gain of £20,000, and that £20,000 is then subject to capital gains tax. Now, the first thing you need to understand is that you have a tax-free allowance each year, which is £3,000. So at the moment, within that tax year, the first £3,000 you make is tax-free, so you don't have to pay any tax on that. From then, the tax you owe is based on your income. So again, I go into this in a lot more detail in that other video, but essentially the two rates you need to be aware of are the basic rate, which is 18%, and the higher rate, which is 24%. Now, at the end of the video, I'm going to go through a couple of very useful tools that you can use to help figure out accurately how much tax you're expected to pay, and then also how you can reduce that using tax loss harvesting. So let's quickly go through what tax loss harvesting is. So essentially, it's selling crypto at a loss, or obviously if you're going to use it for stocks, anything like that. But in this specific example, selling crypto at a loss to offset taxable gains and reduce your capital gains tax liability. So for example, very simple, let's say you made £5,000 in crypto profits on one asset, say Bitcoin, and then on one asset you lost £2,000, so say Solana. You will only be liable to pay tax on £3,000 because 5,000 gain, 2,000 loss. Take the loss off of the gain, you're left with £3,000. So there's a little bit more to it than that. There's one rule you need to be aware of, which is the bed and breakfasting rule. So this is very important. So you cannot rebuy the asset that you sold within 30 days. Otherwise, the tax loss does not count. It essentially goes back to the original acquisition price. So this is all on HMRC in the capital gains manual. You can go check that out. Also, one thing you want to keep in mind as well is that you can claim, you don't have to report your loss straight away. You can actually claim it for up to 4 years at the end of the tax year that you dispose of the asset. So there's not any rush. And also, if you do declare it this year, you've got up to 4 years to use it in the future. So it doesn't have to be used the exact same tax year. It doesn't even have to be declared in the same tax year. You've got 4 years to declare and use that tax loss. So something to keep in mind. So here are the 5 quick and easy steps to go about tax loss harvesting. So identify your losing positions. Obviously, it's been a very difficult cycle these past couple of years, particularly if you've been heavy in altcoins. So you might be looking at your portfolio and some of your assets and thinking, I might want to take a few losses here, some tactical losses to offset some of the gains that I've made on other assets. So take a look at your portfolio, take a look at the losses and gains. Again, I've got a tool to help you do that at the end of the video. Identify your losing positions. You can then sell that crypto at a loss to trigger that capital gains loss. Offset that loss against the gains, which we just mentioned before. And again, step 4, very important, as we just mentioned, after 30 days, you may rebuy the same asset due to the bed and breakfast rule, but not before. As we said, if you buy or rebuy that asset within the 30 days, then the tax loss does not count. And then finally, track your transactions for tax reporting. Now, a really good, useful tool for this is Coinly in the UK. We've got a link down in the description below where you can get a discount. But essentially, this is a very useful platform. It's very easy to use. And as you can see, it hooks up to all of your wallets via an API. So that saves a lot of hassle. And also you can pay to have a 24-hour wallet refresh as well. So every 24 hours, it syncs all of your transactions, which is very handy. As you can see here, you can preview your capital gains for portfolio tracking and tax loss harvesting. As you can see, it shows you the total of your portfolio, your realized profit or losses, what you're expected to be paying. And also you can print off your tax reports ready to send to your account or whatever service you want to use. And then finally, you can download all your tax documents, and whatever country you're in as well. Works great for the UK. I've used it personally, learning crypto. We've used it as a company. Very happy with the service. Now, a couple of mistakes to avoid if you're going to try and attempt to use some tax loss harvesting. So first of all, not keeping track of your trades and missing the losses to offset. Again, Coinly is going to help out with that massively. Assuming crypto to crypto swaps aren't taxable, which they of course are. So any crypto to crypto transaction is taxable if you've made a profit. Forgetting to use the capital gains tax allowance before the tax year ends, of course, which is on April 5th. So as I say, we are approaching that time where you need to start thinking about getting those transactions all finalized. And then finally, not knowing how to claim capital losses in the future years. And as we've said before, they can be used within the next 4 tax years. So important to keep note. Now, finally, as we mentioned before, in terms of figuring out how much capital gains tax you owe, as I said, I go into this in a much more detail in another video, but one website I really recommend is Tax Scout. So as you can see here, it's got a calculator. You can type in all of your profits, so your profit from your capital gains, your annual salary, any other income, and then it's going to spit out exactly what you're owe or what you're going to owe for your capital gains. And as you can see, it includes all the capital gains tax-free allowance, all of that stuff. And what you can actually do is you can actually pay for a self-assessment via Tax Scouts, which again, I highly recommend. So let me know in the comments below if you found this useful, if tax loss harvesting is something you've done before or are looking to do this cycle, as I say, particularly due to the poor performance of altcoins. Hope you enjoyed and found the video useful. Drop a like and a subscribe, and I'll catch you in the next one.